And it was crude and today's two-week economic reports, in addition to the Fed, that investors were focused on. Bob Pisani has that part of the market story.
May's CPI fell 0.1%, with year-over-year gains down 1.9%. Gasoline prices also fell roughly 6%. Now, not surprisingly, that drop in gasoline prices weighed on May retail sales. It fell 0.3%, that's compared to April, below expectations that sales would be flat. But there may not be a cause for alarm just yet. Broader retail trends are still very much intact. So, for example, home improvement is continuing to do well. E-commerce is continuing to do well and gain at the expense of department stores. Consumer electronics sales are notoriously volatile, so that might explain that. And by the way, April retail sales, were revised upward. So the markets also turned lower on the weekly oil inventory report, which showed a smaller than expected drawdown in crude inventories. Oil promptly sank below $45. That's the lowest level since November. So here's the good news. After 2 down days on Friday and Monday, the tech sell-off has abated. It's basically gone away. And with that, I think the odds of a broader market correction for the moment appear to have abated as well. Here's the bad news. The choppy economic data and the stubborn refusal of inflation to rise toward the Fed's target is making the Fed's job a little bit more difficult. But keep this in mind. Cheap oil has been a huge factor in the inflation and retail sales equation. But lower oil is good for the consumer. So we shouldn't be rooting for higher oil just to satisfy some inflation target that the Federal Reserve has. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.